Okay, let's delve into carbon accounting for a bit. So the first step is, when doing an environmental impact assessment of an organization's operations, typically what we do is we use the greenhouse gas protocol, which is it's the de facto standard for company reporting as far as environmental impact goes. And the protocol dictates that we have to classify the emissions that a company is responsible for into three key areas. And they call those three key areas scopes. Scope 1 is everything related to combustion in company-owned equipment and refrigeration leakage. Scope 2 is the purchase of energy from third-party providers like electricity. And then Scope 3 is everything else. Business flights, commuter travel to and from work, the paper you buy to print stuff at your office and so on. So that, in a nutshell, is what the greenhouse gas protocol says in terms of Scope 1, Scope 2 and Scope 3. Scope 1 and Scope 2 are the important ones because these are what they call the direct emissions. These, when we say direct, we mean these are the emissions that a company is directly responsible for because they can implement things like climate neutral fuel to reduce their fuel impacts, or they can implement technologies to reduce their electricity consumption. So those are the really two critical factors that we have to look at when we want to help an organization get started on the path of mitigating its footprint and treading lightly as they go further. We're now starting to see industry-specific type protocols being developed, which are based by and large on the greenhouse gas protocol. And what these industry-specific protocols are designed to do, they're designed to create a level playing field in a given industry so that you can actually truly compare apples with apples across organizations. And a good example of that is the HCMI protocol, the Hotel Carbon Management Initiative protocol. It's a derivative of the greenhouse gas protocol. And what this allows us to do is it allows us to look at different organizations, two separate hotels and different companies, and create a direct apples for apples comparison in terms of the carbon footprint per room night and the carbon footprint per hour of utilization of a meeting space. And it is directly pertinent to the consumer of that room night or the consumer of that meeting space, because the protocol excludes all the non-direct guest or consumer-facing elements. So it's actually a very, very nice implementation, and it's the implementation upon which we have based our hospitality solution, where we have our hospitality solution is a derivative of our core carbon solution, but it has a very, very deep value proposition specifically geared at the hospitality industry. So that's a little bit about carbon accounting and scope and how protocols work.